Yes, today's topic for discussion is taxation. What is taxation is all about? Taxation means when we are paying something, we are purchasing something, and we are going to pay some amount to the government. That is known as tax. Tax is today an important source of revenue for governments in all the countries. It has become inevitable imposition because it has great potential for raising funds for meeting the development and defense needs of a nation. In another way, we can say the tax, the amount that has been charged on income, sale, purchase, and properties were collected to run the government machinery. If we are not going to pay any penny to the government, how come the government will work? Government will work on the basis of the payment that we are going to pay them. We are having two types of taxes, direct tax and indirect tax. Direct tax, a tax which is borne and paid directly by the person who is purchasing, who is availing any service. That is known as income tax, wealth tax, gift tax, etc. And in another form, we can say that is known as direct tax. The person who is going to pay the tax, the charge, who is using that service directly to the government, that taxes, that amount, that payment is known as direct tax. It is directly paid by taxpayer to the taxpayer, right? And it comes from the own profit of the person who is availing that service. Indirect tax. If a tax is passed on by the taxpayer to some other person, it is an indirect tax, for example, sales tax, VAT, etc. When the tax is not being directly paid by the taxpayer, it has been paid, the burden has been transferred to the other person through some media. That is known as indirect tax. According to the Income Tax Act 1961, if you are going through the history of it, in 1857, income tax was first introduced in India in 1860 by British ruler James Wilson, who has become the first Indian finance member. In order to meet the heavy expenses and losses that has been suffered by the rulers due to the freedom movement of 1857, he has introduced the temporary revenue format, the media through which income has been generated for the government. The history of income tax in India has been divided into three periods: 1860 to 1885, 1886 to 1914, and 1942 date. At present, Income Tax Act 1961 is forced in India. The present Income Tax Act was enacted in 1961, which came into force on 1st of April 1962. In 1956, the government referred the Income Tax Act to the Law Commission, which submitted its report in 1958. According to Direct Taxes Administration Inquiry Commission was appointed in 1958 under the chairmanship of Sri Mahavir Tyagi. On the basis of this recommendation, the body that has been made, that is Income Tax Act 1961, that has been enacted, and it has been amended. It has been changed number of times. Where we are going to take our Income Tax Act 1961, Annual Finance Act, Income Tax Rules 1961, and Central Board of Direct Taxes Judicial Division. Let me say something about scheme of income tax. Determination of residential status. First of all, we have to understand the assessed residential status. How we have to calculate the total income. We have to consider five very important heads: income from salary, house property, income from profit and gains from business and professions, from capital gains, and from other sources. These are very important five heads through which we are going to generate our income, that how much income that person is earning through some media, right? Here we are. Next step is how we have to assess the tax. First one is step system. Second one is slab system. Step system is not in force right now, and slab system is in force right now. Latest rates of slab rates, right? The previous years, we are talking about 11 and 12, now is 20 to 21, where the tax slab rates have been started from 3 lakh to 5 lakh, where they are going to charge 10%, and after that 20% and 30%. And that is in this way the slab rate changes. And for senior citizens, that the slab rate starts from 8 lakh, from 10 lakh to moreover above beyond that, and 8 lakh above it will be 10% only. A lot of relaxation has been given to the senior citizen people so that their future is safe and they're not going to pay much money to the government, right? And another one is the important definition that you have to understand what income tax is all about. Tax collected, the tax that has been collected by the central government for each financial year on the total taxable income of an assessee earned during the previous year is called income tax. What is income tax? The tax, the amount that has been collected by the central government. We are considering two important years, financial years and previous year assessment year. Financial year is a year in which we are going to assess the tax, and previous year in which we are earning the amount, right? Who is assessee? To whom we can call assessee? According to Income Tax Act 1961, Section 2, assessee means a person who is liable to pay any tax or other sum of money under this act, for every person in respect of whom in any proceeding under this act has been taken for the assessment of income, loss sustained by him, amount of refund due to him. Assessee is a person who is paying the tax. That can be condition of his income, loss sustained by him, and amount of refund. Third one is every person in respect of whom any proceeding has been taken at this act. Next one is a person who is deemed to be an assessee. Deemed to be assessee known as that the person originally is not an assessee, but he is playing the role of an assessee, right? A person who is deemed to be an assessee in default, if any person is committing a default, that is assessee, and he has committed default, then that person is also known as assessee. How come? We can say that we are assessing the tax. What does the term assessment mean? It is the process of determining the correctness of income of an assessee and of assessing the amount of tax payable by him and procedure for imposing tax liability. We are having two very important terminologies, the assessment year and previous year. An assessment year is a period of 12 months commencing on 4th April and ending 31st of March. It is a year in which the income of previous year is to be assessed. The current assessment year is 2012 to 2013, right? I'm just giving you the example of 2012 to 2013, but we are going to say the period of 12 months commencing on 1st April and 31st March. That means it's a period in which we are going to set the amount of tax, amount of income we are earning, and the current assessment year will be the 2020 to 2021, right? And previous year is a year in which we are earning the income, right? It can be known as accounting year and financial year, right? Here is example is there in front of you in the screen. You can see what does the previous year assessment year means. What is person and to whom we can call person? Person according to section 2, subsection 31 of the Act that has given an inclusive definition of person. Person can be individual, a body of individual, Hindu undivided family, a company, a firm, association of person, local authority. Every artificial and judicial person to not to be included in this above can be considered as person. Define the term income. Mostly we are using the term again and again in the word the income we are going to earn, the income we are earning. What does it mean? The definition of income given in section 2, subsection 24 is inclusive and not exhaustive. It says that certain items are included in the term income. Summary of important rule which give the meaning of income is as below. Income can be illegal income, can be treated as illegal income. Income received at irregular intervals. Taxable income should have been received from an outside source. Any benefit convertible into money, merely gift. Any income that any gift you are giving to any person and that amount of gift exceeds rupees 50,000, that is known as that you have to consider that amount is to be taxable. If we are giving something to anyone and that is less than 50,000, that cannot be comes under the income, right? And it is not taxable. Casual incomes are also taxable. What do you mean by gross total income? It is a total taxable income under all the 5 heads before making deductions under section 86. Gross total means total amount that we are earning, right? Under section 80C to 80. What is total income? Is the income of total income means of the, we can say, the income of assessee from all the sources on which he has to pay income tax. In other words, it is income under all the 5 heads after making deduction under section 80C to 80. Casual income. Casual income is that income which is unexpected and foreseen. It is not received from regular source of income. It is non-recurring income. For example, we cannot say that casual income is the regular basis of income. That means you won some amount from a lottery, from solving any puzzle, right? You have cracked any deal, not on daily basis, but suddenly you have cracked some deal. Is exception for that. Following are not treated as capital gains or casual income. That means capital gain chargeable under the Act. Receipts arising from business and professions. Receipts by way of addition to the remuneration bill. What do you mean by agricultural income? Income that has been earned from the agricultural activities, that is known as an agricultural income. It has been defined in section 2, subsection 1A. According to agricultural income, that means any rent or revenue derived from land which is situated in India and must be received for agricultural purpose. Any income derived from such land by agriculture, it can be any income, actual cultivation through agricultural processes that have been performed other than the one mentioned in the above. Next one, any income derived from any building, farmhouse that has been attached with their agricultural area. Building must be occupied by a cultivator. It must be land in immediate vicinity of the land. Vicinity means that agricultural land has been accompanied with the warehouse itself, right? And that warehouse is also considered as the agricultural land. The cultivator must require it as a dwelling house, storehouse, or other outbuilding. Land must be assessed to land revenue and local rates. If it is not assessed to land revenue and local rates, then it must be situated outside urban areas beyond the distance of 8 kilometers. Right? So, students, that's it. This is the whole structure of taxation. What do you mean by direct? What do you mean by taxes? We have studied direct tax, indirect tax, what type of income we are earning, what do you mean by assessment, your financial area. We have discussed the history. So this is all about. Thank you so much.